this for others that won't be able to be with us because of the network, or others that won't hear us. Okay, so again, we have an uptrend, downtrend, or either the market is in a range, okay, or either the market is in a range. So if the market is in a range, right? So again, when it comes to the trend, right? When it comes to the trend, if the market is in an uptrend, the market in an uptrend, it has two phases, okay? Before I go to the strategy, I need you to understand this. When the market is in an uptrend, it has two phases. Né? So in the uptrend, what basically happens in the uptrend is something like this. The market has a push. Let's say we're going up. It has a push phase and then exhaustion phase. All right? And then push phase. Put it there. And then push phase. And then again, after the push phase, it will have the exhaustion phase. Right? Again, the same thing goes if the market is going down on a downtrend, right? If it's on a downtrend, we know that the market will have a push phase, all right? And then after push phase, exhaustion phase, okay? After exhaustion phase, we'll have a push phase again. And then after that, we'll have exhaustion. And then after that, the market will continue to push down, all right? Even though in theory, we might think, yeah, it's most likely like that. Would like for the markets to be simple like that. But sometimes, even though we're in the market, it's not really like that clean. So you might find that the market is doing something like this: push phase, exhaustion, push, exhaustion, something like this, and then continues, okay? So it's not necessarily that it will be push, exhaustion. So it might do something like this, and before it actually continues. So those are the things that we need to consider, all right? So on this strategy, now we're going to the strategy. First things first that we are going to do. Now, we're going to use the H4 time frame, right? We're going to use 3 time frames. Sometimes we'll need to use 4, but we're going to use 3 time frames, okay? So on those 3 time frames, I need you to understand something on those 3 time frames. The first time frame, your first time frame, which will be your bigger time frame, right? On this one, it will be our H4, which will be your bigger time frame, is the most important time frame, okay? This is the most important time frame. So with that being the most important time frame, we use this to get the direction of the market. We use it to get the direction of the market, or we find the direction of the structure, all right? So after that, okay, after finding the direction, you can clearly see that from here, let's say, okay, we can clearly see that here, the direction of the market is towards the upside, right? So it is towards the upside, all right? So let me just close down some of the candles so that we can just play them. Let me just close down some of the candles so that we can just use history, okay? We can use the practical history. Yeah, come on, this thing, okay. Okay, all right, there we go. Yes, let me bring down my aura now. Yeah, good. So this is our structure, right? Let me just take it a bit forward. Yes, okay, good. So this is our structure. We can clearly see, okay, we can clearly see that the market is what? Uptrend, okay? This is an uptrend, right? Uptrend. Now we want to ride along with the trend, all right? We want to ride along with the trend. And guys, remember, an uptrend, it's something like, remember what we spoke about. Where do you want to enter? Push phase, right? Push phase, exhaustion phase, right? Push phase. It's simple, this thing. We now want to enter on the exhaustions, right? We want to enter on the exhaustions and ride the trend, exhaustion phase. We want to enter on the exhaustions and ride the trend. Push phase, we want to enter on the exhaustions, exhaustion phase, right? So you must always identify, right, on your bigger time frame, where are we? Where are we? In which phase, right? Are we on the push phase? Are we on the push phase or are we on the exhaustion phase? All right, good. So you need to know, we want to enter on the exhaustions. We want to catch the trades here on the exhaustions. All right, good. Remember, this we use zero indicators. It's simple price action. So now let's clean out our chart. Let's clean out our chart. I prefer to use the color on white. I prefer to use the color on white, and then without the grid. Okay, there we go. Now we're going to use this information, right? Okay, now we need to know. You know, the problem that most traders have is when they are drawing their support and resistance lines, they tend to go back too far into history, right? They go back too far into history. What else? Remember, what we are trading, you only need those particular days for that particular week because we are in that particular week that we are trading, right? So for us, if we are trading, let's say, volatility indices, it means since they open 7 days a week, we only need 7 daily candles. All right, we only need 7 daily candles. So after that, 7 daily candles. Okay, what is it that I'm going to do? There, I draw my vertical line. Somebody is appearing with the video. Stop video. Okay. I'm gonna draw my vertical line there. This is the 8th. Okay, another one. This is the 7th. Let me see. This 708. This one 707. Okay. I'll show you this thing. How simple this thing is. I'll show you. I'm boxing them in day by day again. This is the let me check the 6th. Because I don't want to go too far into history. I don't want to go too far into history when I'm trading. Because the problem with most traders is that when you draw your support lines and resistance, you draw something over 1987 there, and then it doesn't work out. You ask yourself what is wrong, and it's because you just went too far into history. All right. So again, I'm boxing them in. All right. I'm boxing them in. This is the 4th. This is the 5th. This is the 6th. This is the 7th. And then this here is the 8th. Let's get the 8th. Going forward, the 8th. Okay. So I have boxed them in using H4 candles, right? This is my trading area. Okay. Like I said, I want us to close what is happening there. I want us to close what is happening there. Okay. So that we get to see something here. Okay. There we go. These are our trading days, all right? These are our trading days. 1, 2, 3, 4, 5. These are our trading days, okay? 5 days. So we take it, we are on the 6th day, right? Let's take it, we are on the 6th day. Let's take it, we are on the 6th day. The 6th day starts on this candle. So we are on the 6th day. We want to trade this candle going forward, right? Now, for us not to make a mistake, I'm going to add this. I want to show you this. This thing is powerful. I'm going to box them in according to each and every day. Insert object, shape, rectangle, day. Just look at how, and remember, just look at how I box them. Open and close, where that day opened and closed, where that day opened and closed, okay? Where that day opened and closed, that's how I'm making those boxes. Where the day opened and closed, open and close, open and close. See? Open and close, another box there. The lowest and the highest of those days. See? Open and close. That's what I'm doing. I'm boxing them. Daily, according to what happened that particular day. See? Yeah? Yes. one is gonna move. Yeah, this thing. Let me insert my. This is objects, shapes, rectangle. Yeah, here it is. You see where it opened and closed? There. You see? Insert, objects, shapes, rectangle. Guys, we're not supposed to take a lot of time, eh? We're not supposed to take a lot of time. Open and close. Okay, so this our candles on the H4, right? Now we go to, this is our, remember, this is our structure. This is our structure. This is our structure. And then admit. This is our structure to the upside, né? To the upside. You see, to the upside, right? To the upside. We use a trend line. Eh? This is the trend line that we're using to the upside. So as we are going to the upside, you notice something, okay? Break, retest, up, retest, up, retest, up, retest. And then when we got here to the upside, there was a top, first top, second top, another top, another top. And then look at this candle here. It broke out of the trend line, which says that now the market is starting to exhaust, or we're starting to look for sells, okay? The market is starting to exhaust, or we're starting to look for sells because it broke out of the trend line. But we don't just want to enter. You know, you don't want to be the first one in the market. So we go to the smaller time frame. Né? We go to the smaller time frame. I just want to show you. We go to the smaller time frame. Né? This is the smaller time frame of that particular time. At that particular time, you see what happened here. The market broke out. It came to the low of the day. Né? This is the low of the day, which would have been our resistance. Né? Which would have been our resistance. After that, when it came to the low of the day, what happened? It went straight up again, came back to the structure. Okay, fine. It means this would have been a false break. This guy's man. Come on. Please make sure your mic is muted. Just please. Okay. So we had the breakout of structure. We sold all the way here. So when that happened, when we had a breakout of that structure going to the lower time frame, né? I just want to show you on the lower time frame. Going to the lower time frame. Again, we're going up, come back, retest, up, come back, up. Yeah, we're expecting a retest. Instead, we had a breakout. Remember on the H4 what happened? Breakout. And then after this breakout of this trend line here on this day, it is this particular day. This is how we're trading on this particular day. Né? This is how we would have taken this trade if it was we were trading on this particular day. After a breakout of this structure here, you see, this is the breakout that we're talking about. When we say the market has broken out of structure, this is what we're talking about. It gets out. Né? But sometimes it can get out and then continue with the trend. You understand? So you don't want to be the first one in the market, because most people, when they see a breakout like this, they immediately jump into the market. They say, no, it's selling. Then they jump in. And then after that, the market reverses. Like, look at what happened here. Something like here. Okay, you see, the market came, broke out of structure, went to the low of the day, came back to structure, came back, continued up. Somebody would have said, no, this is a breakout. You entered, you're out. But look at this. It breaks, we wait for the retest. You would have waited for what? 15, 1 hour, only an hour for that retest to happen. And then after that retest, we wait for the rejection. After the rejection, we take the trade. We're going to take this trade. And then when we take this trade, this is the system. Né? When we take this trade, guys, it's not a matter of just holding out a trade, holding out a trade and say, no, I'm going to hold this trade. It's going to make me dollars. What? No, it's about what you want, right? So the second thing that I use here, I have customized my own Fibonacci tool to show me the exact risk to reward that I'm looking forward to, okay? Show me the exact risk to reward that I'm looking forward to, right? So you're going to take to your entry point all the way to the daily low, all right? All the way to the daily low. So if I was entering here after the breakout here on the retest, it means on the retest, I would have entered here. I would have entered here and check my stop loss. My stop loss was going to be here. My stop loss was going to be here. My stop loss was going to be here on top here. My entry was going to be here when we got the retest. And when I go for a trade, guys, I go for 1:3. When I go for a trade, I go for 1:3. Because every day in the market, you will always get the 1:3. Okay? We always get the 1:3. So 1:3 for me, it means that the stop loss here, if it's 1:3, my entry and this 1:3, it means if I'm risking $10 here, if I'm risking $10 for this particular trade for it to hit stop loss, I will gain $30. All right. So if I'm risking $1, I get $30. So take it like this. If you are taking the trades systematically using the same system over and over again, and you're using 1:3 ratio, the same ratio, take it like this. If you have $30 on your account, you are using 1:3 ratio, for example. You have 30 trades, right? You have 30 trades because it's $30, $1 for each trade. So from 30 trades, if you lose 10 trades from 30 trades, it means you have lost only what? $10, right? You have lost $10. But from the 30 trades, you get to win what? To win 20, right? You get to win 20. So if you're winning 20, that means that now you have $60. You have managed $60 minus the losses of $10. You have made $50. That is the 1:3 risk to reward ratio. That is what we mean by taking a trade, managing the trade, managing your account, managing the money. All right. You should always manage your money because you don't just want to leave your account open like that. Okay. So another thing, you need to make sure that when you take a trade, you must trade near the structure. Near the structure. So what I mean by near the structure, this is our trend line. This means this is our main structure. So if I'm taking a buy, it wouldn't be advisable for you to come and, let's say we are trading on this particular day here. You couldn't come and, you can't come and take a buy here. You know, it is far away from structure. So here you'll be looking, obviously you'll be looking for sales because this is the highest of the day. Okay. You'll be looking for sales. At the lowest of the day, which is again, look, the lowest of the day confluence with the major trend line. You are looking for what? For buys. Okay, look at this. It sold all the way to where? To the trend line. And then at the trend line, the lowest of the day again, bounce, went up. All right, let's move on. Let's move on into something which is happening now. Let's move on to a live trade now. Okay, all right. This is my candle. This is my pattern. Okay, this is simple. You'll catch this first. This is what is happening. This is my H4. Remember what I said with H4, no? Remember what I said with H4. With H4, we look for the overall direction. The first things first. H4, we look for overall direction of the market. Okay? We look for the overall direction of the market. That is your H4. The second time frame, on the second time frame, you look for the behavior of that particular market structure, right? You look for the behavior of that particular market structure. Isn't it that on H4 you will determine the main structure? Let's say on H4 you'll determine that the market is in an uptrend, so you are buying. So you are looking for buys. So when you go to the smaller time frame, which is H1, you will need to determine the behavior of that market structure, right? You'll need to determine the behavior of that particular market structure. So when you go to H1, it means that now on H1, you are going to look for opportunities that you can enter to go with the trend. You're looking for buys, right? But what is happening in H1, you are looking for buy opportunities for you to enter and ride along with the H4 trend, okay? And then on the M15 or M5, which will be your smallest time frame, that will help you to give you sniper entries. You're going to get sniper entries. It's sniper entries. I'll forward you some of the sniper entries that I'm talking about. You'll find that we've entered the cell. We've entered the cell somewhere here. You find that our cell is here and the candle is like this. That's what we call a sniper entry. So we sell here. and you find that the candle is like this. That is what I'm talking about when I say sniper entry. You only get those sniper entries on the smaller time frame. Okay, so remember the rules. Remember the rules. Rule number one. We're starting again with the rules. Rule number one. Rule number one. For those who are out of sound, guys, remember this thing is being recorded. So for those, if you're out of sound, you'll get it again. Let's continue. Let's continue. Rule number one, you need to determine the trend of the market, okay? The trend of the market. Rule number one, okay? We're doing this live now. Determine the trend of the market. Where is the market going? Where is the market going? Now myself, I can just clearly see that this is an uptrend. But for some people, it's not simple. Eh? So, there we go. We draw our trend line. Let me just open it up a bit. Okay, this is what step index here. Okay, it's fine. Let's use step index. Okay, we draw a trend line like this. Okay, it's my trend line on the H4 now. That is my trend line on the H4. We're doing this live now, guys. No? That's my trend line on the H4. So remember what we spoke about. No? Remember what we spoke about. That's the first thing first you need to do. You find the direction of the market. You can clearly see that this is an upward market. No? Number one, upward market. Number one, upward market, upward market. So what you can do, you can just put an arrow there. You just put an arrow so that you always know what you're looking for. You're looking for buys. No? And then after that, you need to determine which stage or which level the market is at. Remember, there's a push phase and exhaustion phase. And then now we want to enter on the exhaustion phase. Okay. Push phase, exhaustion, push, exhaustion, push, exhaustion. All right. And then there on top, looking there on top, you can see how the candles are behaving there on top. All right. The market was up, 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 up. And then there on top, a rejection candle and another rejection, right? You can see this area is acting as a resistance area. Right? I don't need to draw any indicator, anything. I just put my line there. That is the resistant area. And this resistant area has been verified. Okay, I'm running out of time. The meeting will end in 10 minutes. So I guess if the meeting ends in 10 minutes, I'll create another meeting. And then I think we should just use the same link. I think, yeah, I'll create another meeting and then we'll use the same link. Okay, if we run out of time. So let's wrap up. So you can see there's a double top, drop, up. Again, this area rejects, drop. All right, that is on the H4. Now you have found this. You know we're on the uptrend, and then you want to enter this market and ride the trend and ride along. You need to find how is that market behaving on the smaller time frame, right? How is that market behaving on the smaller time frame? You already know that we are on the uptrend on the 4 hour, but how is it behaving? How is it behaving? Look at this. Oh, this is beautiful. Up, come back, push phase, exhaustion. We enter here. Push phase, exhaustion. We enter here buy. Push phase, exhaustion. We enter here buy. Push phase, exhaustion. Our buy is here. Push phase, exhaustion. Buy here. Push phase, exhaustion. Buy here. Push phase, exhaustion. Buy here. Don't enter the cells. Eh? Don't enter the cells. Eh? Because you're not looking for cells. It is clearly an upward market. As much as there are cells, now we are interested in the buys. And then now, look at this. I want to show you this. Okay. Yeah. We had some sort of a trend like thingy here. We had some sort of a trend like thingy here. There was a trend that was happening here. Can clearly see it. Can clearly see that there was another trend here on its own, because here we left this void space here, right? And then the market continued. See, we left this space and then the market created another trend going up. Né? But this way now, it is starting to go. This is a false break. This is what we call a false break, guys. This is what we call a false break. Usually when the market does this and gets out of the zone like this, it is what we call a false break. Né? And then after this behavior here that the market is doing, this behavior. It broke out of this trend line, right? It came down, and then after that, there's another trend line here, went up, down, okay? Where I can say that here we have another mini trend forming, right? As you don't need much, you just need to identify the trend, put your trend line there. This is on the H1. Now we want to enter this market. We want to enter this market. I'm left with legal time. I want to enter this market. When I go to the M15, my M15, look at what M15, same place, same scenario. M15, what is it giving me? You see what M15 is giving me? It means that here, I was going to enter my buy here. I was going to enter my buy here. Exhaustion phase. I gotta remember the phases of the market. Push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion. Exhaustion phase. So what were we going to do? Buy here. Buy this market here. Goes up, take profit. Then when it comes down, you leave it like that. When it respects, again, when it respects the trend line here, we buy some more and then we go with it up there, right? And then again, I'm left with like 5 minutes or so. 5 minutes. I still need to clarify this on one more pair. One more pair. I think if we can just do another example on one more pair. Okay, we are left with 6 minutes. I think we can do that. Let's use volatility 50. Something that, yeah, I've already drawn them in here. Let's use this one. Let's use volatility 50. Okay. Same thing that I did now. Here I use, there we go, my bigger time frame as the H1. My bigger time frame as the H1. So on the H1, I identified the overall trend. On the H4, on the H4, I've identified the overall trend. We're on a downtrend, right? You see my arrow. That is the first thing I did. I remember, arrow to the downside. Yeah? We're on a downtrend, okay? So on the downtrend, my boxes, these are my days. Yeah? My days, 1, 2, 3, 4, 5, 6, 7. I'm trading within a range of these 7 days. 1, 2, 3, 4, 5, 6, 7. I'm trading within a range of these 7 days, okay? So I'm looking for sell opportunities, okay? This is the H4. So when I go to the H1, I need to see how is the market behaving, right? How is the market behaving, okay? So today, this is today, né? This was yesterday, and this is today. And then the market, it went up to the structure, respected the structure, respected the zone, came down, all right? So whenever the market is like this, remember on the H4 here, we are strictly looking for sells. We're looking for sells. So when the market comes to our position here, we're going to look for sells, okay? And then H1 here, it confirmed this was the high of the day. This was the high of yesterday, né? This was the highs of yesterday. And look again, when the market comes to the highs of today, and the highs of today are close to what? To the major trend line, okay? They're close to the major trend line. So we're going to enter ourselves. We're left with like 4 minutes. Okay, so we're going to enter ourselves here on the highs, going down. And then when we scale down to M15, this is still my trend line. Remember, I did not change anything with the trend line, okay? I do not go to M5 and start drawing another trend line. I don't go to M50. I draw one trend line, okay? One trend line. One, you see, one major trend. I have one major trend. I don't have so many. One major trend line, né? One major. This will act as my resistant area. This is my major resistant area, okay? You notice how I did not draw it like this. It's like this. So one major trend line. Still the same one. On the H1, still the same one. I go to M30, still the same trend line, okay? Go to M15, still the same trend line. And then the rest, the resistant areas, look at this. I drew this one. I took this trade today, made nice profits because I took it from here. And then the TP was here. The TP was actually here because my TP was 1:3 and it actually hit 1:6. So as I was saying, as you can see, our trend line is still being respected. And as you can see here, you can clearly see this is a declining triangle. You don't need anything. You can just clearly see, you can see there's your trend line, there's your resistant area, there's a declining triangle. So anytime you expect a breakout of this triangle and the market continues down. So I took this trade, it broke out. the market continued down. All right, and then a second chance for entering was here. Again, the market continued down. And remember, when it comes down, look at where it got to, the lows of today. The lows of today. Okay, so from here, I'm expecting the market to shoot up again. If it respects here, it means it will come lower and try to fill this gap here. All right, if it does not do that, if it breaks here, it means Sia Pezulu. Remember, guys, the market will always give you two options. Don't go to the market thinking, no, I'm selling, I'm just going. No, the market will give you two options. You need confirmation. You need to know what makes you enter systematically. Don't just rush into the market. Systematically, you need to enter. So as the market is doing like this on the H1, right? Let's say this is the H1, and I can clearly see that it has hit my resistance area here. It has hit my resistance area here. It means my support, it's hit my support area. It means the market is going up. So if I can come to M5 and I say I want to take a trade here, I can still come to M5 and take this particular trade here. Okay, but since I'll be now trading on the smaller time frame or taking the trade on the smaller time frame, you see, each and every time frame will have its own trend for that particular time, right? For that particular time, you see now here what is happening here on the M5. So it means if I was going to come, if I wanted to scalp this trade like this, you see, remember, our major is downside. So up, respect here. This is a new zone. Up, respect, a new trend is forming. Already you can see we are out of this. So if we fail to break this, it means we are going even lower. And when we check on H4, look at where we are. We're just here. So if we fail to break here, it means we're going to come and fill this space because the major trend is down nicely and it's a nice declining triangle. Okay, so guys, I think that's about it. If you have any questions, I know there's a lot of questions coming in. I know I will have to do another meeting, but now it's like 8 o'clock. I need to get to work and I'm a bit hungry, so I need to have supper as well. So if there are any questions or if you need a special meeting, we can talk about the fees and everything and we'll do this again, okay? So I will share this video that has been